Okay, so let's face it, taxes are a big deal and they affect everyone. All investors should consider how taxes will impact them. So in this video we will talk about what are the tax implications on income from equity shares. So let's get started. So before going into the taxation part, first it is important to understand what type of share trading activity one is indulged in. Mainly there are three types of trading activity: intraday trading, delivery based trading, and trading in derivatives. Trading in spot market or cash market and scaring off the position in that day only is intraday trading. Trading in spot market or cash market and scaring them at a later date is delivery based trading. And trading in future and options means trading in calls and put is trading in derivatives. Now let's learn about the treatment of intraday trading first. Intraday trading is regarded as a speculative transaction whether it is done on a recognized stock exchange or not. And income derived from intraday trading is regarded as speculative business transaction. Loss from intraday trading can only be settled from other speculative income only. Another one is treatment of delivery based trading. Delivery trades have to be assessed on the quantum and purpose of the trades. Means if the purpose of the trade was to invest in the securities, then it will be assessed under the head capital gain. And if the trades are done frequently in the cash segment, then it has to be assessed as business profit or loss. Means it will be treated as business income. And the treatment and taxability aspect on various cases can be described as: suppose if the purpose is to invest in shares only, means if one do not frequently buys and sell shares, then all the gains from the share trading is to be assessed as capital gain, and the dividend received shall be assessed as income from other sources, which is exempt under section 1034, means you do not have to pay tax on dividend. The equity shares which are sold in less than 1 year of purchase, the profit and loss on that particular security is treated as short-term capital gain or loss, and income tax on these gains has to be assessed flat at 15%. And the next one is tax on long-term capital gains. The equity shares which are sold after 1 year from the date of the purchase, the profit and loss on that particular security is treated as long-term capital gains, and income tax on sale of long-term equity shares is exempt. It means no tax would be payable on sale of equity shares where sale transactions are done on recognized stock exchange, and STT thereon should be paid. Now let's talk about the treatment of derivatives or treatment of future and options. Trading in derivative has to be treated as income from business and profession, and hence ITR 4 will be applicable, where transactions are done on recognized stock exchange and STT thereon is paid. So we can say that the income arising from future and options are treated as normal business income only if the trading is done through recognized stock exchange, then it is treated as a normal business income. Now the next question arises: is set off available on share trading activities? So we can say that any short-term capital loss from equity shares can be set off against short-term capital gains or long-term capital gains from any capital assets. If you have not able to set off this loss entirely, you are allowed to carry it forward for 8 years in your income tax returns and adjust it from your short-term or long-term capital gains in future in any of these 8 years. But do remember that you will only be allowed to carry forward your losses if you have filed an income tax return. So even if your income is less than the minimum taxable income, filing an income tax return is must for carrying forward these losses. And long-term capital loss from equity share is a dead loss. It can neither be adjusted or carry forward. Just like long-term capital gains on equity share has no tax treatment. So it's all about the simple tax treatment of share trading activity. In my next video I will talk about applicability of the tax audit in case of derivative trading or F&O trading. Or for any help on ITR filing, feel free to consult Baniyakamunafa. The email ID is given in the description box. Feel free to write us. And yes, wish you all a very happy new year. We wish you earn a lot of Munafa this year. Happy New Year, guys. And if you like this video, please give us a big fat thumbs up and make sure you have subscribed to my channel. Thanks for watching.